Good morning. Welcome to IG's early morning call. It's a midweek trading session, Wednesday, the 18th of October. Let's take a look at the headlines as we monitor what's going on across inflation in the UK, where we are seeing the numbers coming through with the price of consumers' inflation remaining at 6.7%, core CPI slowing to 6.1%. But even that's not as much as had been expected by economists. It really is a concern now for investors. We've got the longer term picture looking as though inflation could well be supported by the incoming high price of oil as well, and that's widely expected to keep CPI up. Meanwhile, we got some Chinese economic data out today to show that the economy expanded more than expected, but that was a low bar. This is in the third quarter. We are down from the 6% plus expansion we saw in Q2. Industrial output, retail sales also beating expectations. In fact, retail sales rising on the previous month's numbers. And the US earnings season continues to dominate. We saw a whole raft of numbers coming through yesterday. Last night, we saw United Airlines cutting its outlook for the rest of the year. But today, we've got Procter & Gamble, we've got Tesla, we've got Netflix, all session stocks on the IG platform. Take a look at volatility, up for a second day today. The tragedy that unveiled itself yesterday about the bombing in the hospital in Gaza, whoever it was that was responsible, has just painted this really dark picture that is developing. But I don't see it coming through at the moment in terms of the numbers. Very difficult talking about this in terms of markets because clearly we have to continue to consider those poor people involved in the center of what's going on there. But just a quick look at what's been happening in terms of volatility. We're up for a second day today, continue to be capped out by the 200-day moving average. And I don't really see much coming through. As we'll see in just a few moments' time, gold is where the real reaction is. Let's take a look at what's happening across the European markets as we look towards the start of today's trade. We're now expecting gains pretty much across the board on the European markets at the top of the hour. We're currently trading at 76.93. You can see actually this is quite a healthy move up. Not quite as high as we were intraday in yesterday's session, but nonetheless, we're looking as though we're looking to see some sort of a rise at the start of today's session. A number of companies here in the UK and indeed Germany reporting earnings that could give a little bit of an uplift. Adidas in Germany looking good. We'll take a look at that in just a few moments' time. In fact, I am seeing this market now pretty much where it closed out yesterday's cash session. So what I just said for the London markets doesn't seem to be applying to the German DAX. Quick tune into what's happening in France. Same sort of thing, actually. I don't see any upward movement at the moment over yesterday's cash close. So I think at the moment, at least, we are looking potentially for a flat open on the German and French markets. And I would take that as well to mean some of the other European markets as well. But the London market certainly outperforming on the upside. That lift in the price of oil we'll see in just a few moments' time, and some of the other commodities helping the London markets, I suspect, for a slightly stronger start at the beginning of the session today. Let's take a look at what's been happening in the Japanese and the Hong Kong and the Australian markets, with gains on the Nikkei, but a loss on the Hang Seng. S&P ASX 200 up by a margin of 1/3%. I want to take a look at what's been happening on the Japanese markets, the Japanese 225 or the Nikkei. You can see if you look at what's been going on here, the Bank of Japan said earlier this morning it would conduct an emergency bond operation, offering to buy 300 billion Japanese yen. That's around about $2 billion of bonds with maturities of between 5 to 10 years, and 100 billion yen of bonds with maturities slightly longer than that, 10 to 25 years. This has a supporting effect on the market. So far as the Japanese yen is concerned, you can see there not much move on from yesterday's volatile day. 149.68 still continuing to trade below the 150 level. Let's take a look at the Wall Street close as of yesterday's end of the session. Yesterday, we saw a fractional gain for the Dow Jones Industrial Average, but losses on the S&P 500 and the Nasdaq, or technical losses on the S&P, but you can see barely changed on the session, but 0.25% lower. Let's take a look at the Dow because you can see the shape of yesterday's candle, a very, very small body, which means we closed not too far away, as we've just seen from the open. But in fact, there was some interesting trading both sides of that yesterday. But I think generally you can see that the sweep of things, we've got a little doji style candle there at the moment indicating not much move on from the close yesterday. But the broad sweep of things is I think that we have got this recovery underway. How far does it go? Well, I think there's a lot of there's a number of ways, of course, you can measure this, but let me put a Fibonacci on here just to take a look at that high that we had there and work out where the potential point of resistance is. We're currently trading at 33,980. 34,171 is a 61.8% retracement that could cause a little bit of an upset in terms of any more upside to go. And of course, then you've got these two moving averages here, the 50 and 100 period moving average before we get to the 76.4% retracement, potential ceiling at 34,493. So technically, there is potentially more upside to go. Momentum is on the way up, indicating potentially we've got some more upside. But of course, it's all about the fundamentals. It's all about the companies reporting earnings, which I quickly want to run through in terms of some of those individual companies in just a few moments' time. Not before I take a look at the NASDAQ. Just wanted to quickly show you what's been going on here. We've got a little bit of a triangle shape there. So waiting for a breakout, upside or downside, again, depending on some of these companies reporting earnings. We've got Netflix, we've got Tesla, 4 character ticker numbers, which indicates they're part of the NASDAQ. Anything with a 4 ticker character reference is a NASDAQ listed company. So both those companies coming after the bell tonight, and both have the potential to move the markets, and both are all sessions on the IG platform. Before the markets open today, we got Procter & Gamble, another aspect of what's been happening. Let's just quickly run on to whatever's happening in other parts of the market. I flagged this yesterday, forgive the pun. This is the pennant pattern here. I drew the length of the post there, indicating the potential upside, which would take us just to within a few dollars of the 2,000 level. And we're on our way there at the moment. Currently trading around about $60 away from the 2,000 level at 1937. Gold taking advantage of what's happening geopolitically. I think people looking for some sort of safety in the markets. It's not just gold, it's platinum, it's silver, it's all those precious metals. So we're seeing money going into there. Silver currently trading at 23.08. It's been a big lift in silver since the lows we had back in October of something like around about $250. Sorry, to $2.50 up to $23.07 the ounce. So sterling, spot silver gaining as well. Now, let's take a look at what's been happening economically. I want to dig into the numbers in UK inflation figures we saw just half an hour ago. UK inflation unchanged, 6.7% in September year on year. We've been looking for a drop to 6.6%. So this is halting months of progress towards easing the pressure on households. Core CPI rising 6.1% after 6.2% in August, but the estimates have been for a slightly lower print of 6%. Producer prices currently trading, or with the numbers out this morning, trading down 0.1% year on year. Retail price index 8.9%. Some measurements in the UK economy are still using retail prices. I think the state pension rises in line with retail prices, I think, continuing to do so. I might be wrong on that, but there are some benchmarks that still use RPI, and RPI is still racing away just below that 9% level, which indicates that prices are still rising, and rising at a fair lick as well. And it's unlikely, I think, like a drop in this number because of the rise in the price of oil, which I'll cover in just a few moments' time. Let's take a look at the market effect of this. I'm going to do 10-minute candles on sterling against the US dollar. You can see clearly here the point at which we saw that print come through. It's a bit like the US the other day. It was only slightly stronger than expected, but it did see a move in the market, and that's the move that we saw. That being said, we're now seeing some of that upside for sterling against the US dollar evaporate. We're currently trading just below the 122 level for sterling against the US dollar. Just want to return to the longer term chart. You can see this move up that we had for sterling as we saw the dollar weakening in the last couple of weeks or so, and that is just a small retracement in what is otherwise a directional movement for sterling on the way down against that stronger US dollar. Let's take a quick look at what's been happening in China, because we've seen some economic data out overnight there. It's really a question of how you read this data as to where you start from, where you finish, and how you interpret it. The bottom line is that it's growing faster than expected in the third quarter. Gross domestic product, GDP, growing 4.9% in July to September from this time last year. Now, that beat expectations of a 4.4% increase. However, it was down from the 6.3% expansion that we saw in the second quarter, which for me means that the Chinese economy is still slowing. But nonetheless, it's not slowing at the pace that some economists had been expecting. Now, Beijing has in recent weeks unveiled a raft of measures, including more public work spending, interest rate cuts, and this latest data suggesting that the Chinese government growth target of around about 5% in 2023 is likely, or loosely likely, to be achieved. over the first 9 months of the year, the economy expanded 5.2%. Now, consumption and industrial activity in September also surprised on the upside, but we saw a pullback there as well. Industrial output in September grew a stronger than expected 4.5% from this time last year. Analysts had expected that at a 4.3% reading. So again, better than had been expected. Retail sales also beating expectations, rising 5.5% last month and accelerating from a 4.6% rise in August. So that genuinely is better than expected, faster than last month, and I think reflects the amount of effort that the Chinese authorities have put into the economy to try and get people back out spending, to try and generate some heat in the economy. Analysts had forecast sales to expand around about 4.9%. The only cloud in the picture, fixed asset investment. Look at that, up 3.1%. It looks strong, but in fact, in January to September, that was the figure we got there. The estimates have been for 3.2% in that same period. So you can basically, you take your number, you work out what it means, and then you trade the market. But in fact, there's not much trading to be had at the moment. We're still between this band for the dollar Chinese yuan between 726.80 and 737.80, which in fact were the highs that we saw on this market, that intraday high back in October last year. But we're still in the middle of this band, 73.145, not much of a bite in terms of that. Let's take a look at some of the corporates. Oh boy, there's a lot of them this morning. I want to take a look at some of the big ones that could well move the markets this morning. I quite like the look and shape and feel of Whitbread this morning, posting a 44% rise in interim profit, helped by strong demand and resilient spending at its pubs and restaurants. The Premier Inn owner says adjusted profit before tax rose to £391 million in the first half, up from 272 this time last year. It also announced a further share buyback of some £300 million. This is around about 5% of total capital, market capital, at just over £6 billion. So I think, broadly speaking, this is a good effort by the company to return some of the surplus cash to investors. We've seen this retracement down here. As I say, I quite like the look and feel of this number out today. 33.20 is where we're opening this morning. This blue box represents the move that we've seen since the beginning of the year. The stock from the lows to the highs that we saw there back in September, up 44.65%. And I suspect potentially, possibly, we could well see some sort of upside to go on the price of Whitbread. If you're long on this, my advice to anybody with a position open, with a long position, if you like the look and shape and feel of these things this morning, you put your stop loss below the 200-day moving average at around about the 32 level. 33.20 is where we are opening. Meanwhile, 2024 will be a transition year for ASML. This is the chip equipment manufacturing company, the company that makes these machines that make the chips. According to its chief executive, this transition year is continuing. The semiconductor equipment maker posting earnings of 1.9 billion in the third quarter of this year. Analysts had forecast a net profit of 1.81 billion. Also an improvement on the 1.7 billion posted for the same quarter this time last year. The company reiterating its expectations for full-year sales growth of 30%. The semiconductor industry is currently working through the bottom of the cycle, according to ASML's chief executive. This is where we're opening this morning. After yesterday's gain of 0.75%, we're opening at €573.05. And as I said, broadly speaking, pretty good numbers out this morning. The customers of ASML expect the inflection point to be visible by the end of the year, but are uncertain about the shape of the demand recovery, hence the transition period expected for next year. Look at where we are. Let me take this band off here because I think we can get rid of that. The move up that we've seen is accompanied by a move up in momentum. It'd be interesting to see where this stock opens. If you're long on this, your stop goes underneath the underside of yesterday's candle, which saw a fairly long wick. That would be my recommendation there. If you're short on this, you go above the 50-period moving average at around about the 584 level. So 573.05 is where we're opening. Difficult to judge exactly what the market reaction to this is going to be. But I think it's a better picture for Adidas. Watch out for Adidas at the open today. And the Frankfurt markets, the sportswear giant, raising its 2023 revenue forecast, and it's cut its expected loss for the year. Adidas now expects full-year operating loss of around about €100 million, previously estimated that at 450 million. So I think, broadly speaking, it is a good news story. Adidas said third quarter revenues grew by 1% in currency neutral terms compared to the same period this time last year, while gross margins improved by 0.2 percentage points to 49.3%. Now, excluding the cost of ending the partnership with Kanye West, remember this was a really big issue this time last year, Adidas now says it sees underlying operating profit of 100 million euros. Adidas has been selling its remaining stock of the range since the end of May, helping narrow that expected loss. Let's take a look at the share price chart for Adidas, which trades on the German DAX. It will open after having gained something like around about 0.1% yesterday at 170 euros 81. The stock's gained 34% since the start of the year. Investors gaining some sort of confidence in the group's ability to turn the company around after the end of that partnership with Kanye West. Adidas will report its full third quarter results on the 8th of November. So I'm thinking possibly maybe this could be an upside stock story. If you're trading higher at 170.81, stock goes below recent price action with a view to getting some sort of protection. Just Eat Takeaway published an upbeat trading statement this morning. The group upgrading its EBITDA guidance to approximately 310 billion euros. It also raising its free cash flow guidance to break even in the second half of this year. And it says positive thereafter. It's also launching a new share buyback program, around about 150 million euros. As of yesterday, the group market cap was 2.5 billion. I want to take a look at the share price chart, trading not too far away from record lows. This big red box here represents that near 90% value destruction. And in fact, in the last few days, or last few weeks, we have actually traded below that line. Yesterday was a down day by a margin of 2.4%. Will we see an update today? Possibly. The stock will open at 10.33. If you're long on this, stock goes underneath this 1,000 level down here, or a 10 euro point on the chart, which represents the value to be made possibly for Just Eat Takeaway at the start of today's trade. Last night, United Airlines reported weaker fourth quarter earnings due to higher costs. The announcement was made alongside its earnings report for Q3, which actually looked pretty good. United Airlines reporting profit at $3.65 a share, higher than the street estimates of $3.41. Revenue also marginally beat expectations at 14.48 billion. Yet the stock fell in extended trade. Why? Yeah, because of that outlook. It now expects an adjusted profit of between 150 to 180 per share. It was $2.06 expected by analysts. So that is not good news. Look at the direction of travel. Forgive the pun, for UAL as of last night. This is an all-session stock, so that candle there has built in the losses we're expecting today at the start on the cash trading day later on today. My colleague Angeline Ong will be taking you through this in some more detail at 1:30 today as we look ahead to the start of today's US session. This drop that we've seen there, taking us back now down to levels not seen since the 4th of January this year. So pretty much wiping out all the positive at the early part of the year on expectations of a good summer. We got the good summer. Now it's a question of how the stock trades into the back end of the year, and it's not looking particularly good. United has the biggest exposure to Israel amongst the US carriers. It's suspended flights to Tel Aviv. No obvious reason to why, until conditions allow them to resume. Flights to Israel account for 1.9% of its planned global capacity. As I said, it's an all-session stock on the IG platform. You get another chance to take a bite of this at 9 o'clock this morning. But I think whichever way you cut it, when we see the markets open later on today on the cash session, it will be a down stock story. Tesla due to report after the markets closed tonight. The street forecasting earnings of 74 cents, yet another contraction on the previous quarter. Chief Executive and founder Elon Musk in amongst the headlines again. Priority for him has been to focus on sales rather than profits since the beginning of the year. Concerns also may come from the top line. Revenue is expected to drop from 24.3 billion after 24.9 billion 3 months ago. Sorry, dropping to 24.3 from 24.9. Now, the long-term Tesla story is a well-trodden path, and I don't need to tell you about the rise at the beginning of 2020 as we begun to push towards electric vehicles in a big way. You can see here being supported by this blue line, which is the 100-period moving average. We are expected to open at 9 o'clock a.m. UK time this morning on Tesla. All sessions on the IG platform, $254.17. This company reports after bell this evening and could well see some interesting trading opportunities on the IG platform as we go towards the release of those numbers. Netflix, another stock expected to post its report after the closing bell tonight. The Street expects earnings of $3.49 a share to be compared with $3.10 last year. Revenue also expected to rise to $8.54 billion. As ever, the number of new net subscribers is almost certainly going to be the headline to watch out for. 6 million new streamers are expected. The crackdown on password sharing may have helped achieving this target. Another all-session stock. I want to show you what's going on there with Netflix after the gains that we've seen since the beginning of the year of 73%, taking us up to that high on the 19th of July. Was still a shadow of the former COVID highs that we saw, the record highs. And we are expected to open this morning at 9 o'clock at $353.42 at the start of today's session. Procter & Gamble, another one. This comes through before the bell today, looking for earnings at $1.72 and revenues at $21.57 billion. Another all-session stock. Don't forget as well to look out for other stocks as well this morning. Alcoa, Abbott Labs, NASDAQ, all reporting third quarter earnings before the bell today. I think we've got a brief chart showing you some of those companies to report third quarter figures before the opening bell this morning. And that concludes our look at some of the stocks to watch. What I do want to do, though, is to take a quick look at some of the other areas of the market. This is oil. Very briefly, I want to show you what's going on with oil because we saw crude oil inventories falling by 4.4 million barrels last week, according to the API. And this helped this upside performance here. Also concerns about geopolitics in the area. Let's just take a quick look at the API numbers. Refined products, gasoline inventories falling by 1.6 million, distillate stocks down by 600 million, but crude oil inventories up by 4.4 million barrels last week, according to yesterday's data. And that was one of the reasons as to why we saw that number rise for oil. Look, that's it for me. I think we are still being steered by corporate news headlines. A number of companies out this morning, as we've seen, could well give us an upside potentially for the London markets, but not so, I don't think, necessarily for the German DAX or French markets. We're looking for a flat open there. Money going into London. It's all about those US earnings later on today. We're back at 10:30 with Charting the Markets.